Well, well, well. Several of the world's largest economies are now in recession. We're talking Finland, Ireland, Japan, and the UK have all been recently confirmed in recession, with many other countries like Germany likely being in recession. And countries like Africa are having significant economic declines. China's economy is suffering from deflation, yet your general public has no idea what the hell is happening. Most of them are just scrolling through twerking videos on TikTok all day and night, checking how many likes their recent Instagram picture got, or how many people commented on their latest Facebook post. Not you, though. You're here. You're not watching twerking videos, although you never know what I'll pull out my hat. With that said, hit that sub button and maybe I'll twerk one day for you. But probably not. So, one of the big questions people ask is if the 2024 global recession is going to be as big as the 2008 global recession. Or an even bigger question that's asked when recession is mentioned. And they kind of just give you this confused look like, huh? Recession? The stock markets are at all-time high. The unemployment rate is at all-time lows. The hell are you talking about a recession, you idiot? Now, we will come back to this, but let's first dive into one of the many reasons why we are heading towards trouble. So, China, the United States, Japan, and Germany account for like 60% of the world's manufacturing, right? As you can see with this image. And a big portion of where the United States export to is, well, just take a guess. China, who's in deflation. UK, who's in recession. And Japan, who's also in recession. Now, we also export a good bit to Canada and Mexico, but a good portion is exported to the countries that I just mentioned who are in trouble. And also, consider that all these countries export to each other as well. So if China, Japan, UK, Germany, all in deflation or recession territory, what do you think that does for the demand? Well, demand goes down. And side note, let's just make sure you understand what deflation is. Now, China is falling deeper and deeper into deflation, and prices are falling at their largest rate in over 15 years. So why is this a big deal? And why is deflation concerning? Well, deflation leads to decreased consumer spending, increased real debt burden, lower profits for businesses, economic contraction, and it can cause a psychological negative feedback loop for the whole economy. Not to mention, deflation will often lead to recession because of all of these things. So we're in a little bit of a mess here. We have some of the world's leading exporters and importers in recession or deflation. And this all crushes the demand from other countries. It's like a whole domino effect. And when it comes to the United States, we are a much larger importer than exporter. And a major part of where we get our imports from are China, Germany, and Japan. If these countries are in deflation or recession, it means countries are going to start crumbling. There's going to be less products to export. The demand is going to be higher than the supply. All of this means higher prices for the importer, or yours truly, the United States. Now, a lot of people will look at you like you're crazy if you talk to them about this. They'll say something to you like, you're listening to that little idiot with all the tattoos on YouTube still, aren't you? Don't you watch the news? The S&P 500 is at record highs, dummy. And just take a look at the unemployment rate, you idiot. The economy is doing great. Stop listening to that conspiracy theorist, fear-mongering, clickbait douchebag on YouTube. I mean, hey, probably half right on some of those things, but whatever. But seriously, consider this. Guess what Japan has right now? They have record stock highs. Guess what they also have? Near record lows for unemployment. Yet they unexpectedly fell into a recession. And Japan is the third largest economy, although I actually think they slipped a little bit after the recession. But we aren't done. Guess what's the case for Germany? All-time stock market highs and close to lowest levels ever in unemployment. And for the UK, a pinch under all-time highs with close to all-time lows for unemployment, yet in recession. And let's not even mention how much debt is fueling the American economy right now.
We're broke.
And although on fumes, we are still running off the stimulus money from COVID. And yeah, consumer spending has been pretty good, but do you know where it's coming from? Credit cards.
7 million. Never leave the cave without it.
So let's take a look at this chart. Shoo-wee! We just keep going higher and higher and higher. Credit card debt is at an all-time high of $1.13 trillion. The problem is that most of the accrued credit card debt from before was with low interest rates. We've accrued a ton of credit card debt now over the last year with the higher interest rates. We just hit like 1 trillion in credit card debt like 6 months ago, back in August, which was a record. And we've since added another 130 billion since that time. These credit cards have to be paid off, which means less consumer spending. Or it means defaults coming up, which means stricter lending practices from the banks. And this is all likely going to lead to a global recession. We're already most of the way there. I mean, are you prepared for job losses, lower income, reduced spending, increased poverty, government budget strains? These are all included with a global recession like we saw in 2008. Hopefully, you are making the right moves to protect yourself. Now, we want to hear from you. Do you agree? Or am I just a kook? Hey, be honest. I got thick skin. Leave a comment. Let us know. Make sure you hit that sub button. Talk to you soon.